What is up guys, my name is Ignas, welcome back to the channel. Today we will be doing a full analysis on Alibaba Group Holding, ticker symbol BABA. This year was really bad for the stock as it is down 41.47%, and in the last 5 years the stock is only up for 47.48%. One could say that it is still not the worst result someone could get, but if we compare it to the S&P 500 index, that one is up for almost 110% in 5 years. So there is more than 2x difference in returns over that period. But could now be the time to start buying into Alibaba? To figure that out, today we will be looking into the recent earnings, then what we are actually getting buying into this BABA ticker. After that we will look into financials and fundamentals, then we'll briefly go through technical analysis, after that what Superinvestors are doing with the stock, and lastly on our current holdings on eToro. I hope this one will bring more clarity and help us in deciding if we should be buying more or selling out. Alibaba Group provides technology, infrastructure, and marketing reach to merchants, brands, retailers, and other businesses to engage with their users and customers. It operates through 4 segments: core commerce, cloud computing, digital media and entertainment, and innovation initiatives and others. The company operates a social commerce platform, a third-party online and mobile commerce platform for brands and retailers, a monetization platform, Alibaba.com, which is an online wholesale marketplace, AliExpress, a retail marketplace, and other e-commerce platforms. Further, it provides elastic computing, database, storage, virtualization network, large-scale computing, security, management and application, big data analytics, machine learning platform, and Internet of Things services. Additionally, they operate online content platforms that provide videos, films, live events, news feeds, literature, music, and others. So last week Alibaba reported earnings, and shares dropped 11% for the day as they slashed guidance and earnings plunged on China's slowdown. So on the top line they reported 200 billion Chinese yuan, which was a 29% year-on-year increase, but that unfortunately missed estimates, which were at just under 205 billion yuan. On the bottom line there was again a miss. They reported earnings per share at 11.20 yuan, which was a decline at 38% year-on-year, and analysts expected to get 12.36 yuan per share. So it's already an issue that they missed estimates for both top and bottom lines, but then they also lowered their guidance for the current fiscal year. Previously they had expectations to grow revenue almost 30% year-on-year, but that is now changed between 20 and 23%. So with these misses and poor guidance, the shares really took a hit as the price fell 11% for Thursday of last week, and they continue to still go lower today. But poor guidance is not the only risk BABA investors face. We should also have the VIE structure in mind. The author of this article explains why buying into BABA, what we are actually getting is ownership in this variable interest entity. So when you buy a stock in BABA, you technically don't own shares in Alibaba Group itself, but in an offshore shell company that only has a claim to its profits. So if one buys BABA on the New York Stock Exchange, you are actually buying into the ADR that in turn has a claim on the Alibaba's VIE. And as already mentioned, VIEs are not ownership claims on companies, but rather contractual agreements on part of their profits. So this means that BABA shareholders have no direct ownership in the company's assets. And there is speculation that China could ban VIEs, leaving anyone with a BABA ticker holding the bags. And these concerns have started to get some validity too. Did this rough ride worsens as China set to request the delisting? So Didi Global, China's ride-hailing giant, had its shares fell on Friday after Chinese regulators were said to have asked them to delist from US exchanges. And those ADRs closed lower 2.8% for the day at $7.88. But at one point it had dropped 7.5% for the day. All is not well for Didi, and China's move against Didi offers a glimpse into the ongoing regulatory probe on the country's big tech companies. So we have Didi in the spotlight today, but who's to say that Alibaba wouldn't be next in line? So the news haven't been great recently, but now let's take a deeper look into financials. Here I have Alibaba's revenues for the trailing 12 months in the last 5 years. So in June of 2016 they were bringing $17 billion in revenue, then after a year in 2017 that was at $25.6 billion, in 2018 it was already almost double that at $44.7 billion, then 2019 we had $60.7 billion, in 2020 revenue was at $77 billion, and currently for the the trailing 12 months, we are looking at $119.6 billion US. So we can find that there are consistent increases in revenues, and the highest year-on-year quarterly growth was back in 2018 with 114% up, while the lowest was in 2020, but still with an increase of 6.45%. So in the last 5 years there was no one quarter where we could get a year-on-year decrease in revenue. So this part looks really solid and promising. The next part I want to take a look into is the price to earnings history over the last 5 years. So in 2016 the price to earnings for Alibaba was at 55.68, then in 2017 it went a bit lower to 50.35, another year passed and it was down to 44.89, then in 2019 it dropped to 19.91, in 2020 we saw the price increasing to around $300 per share, so the price to earnings went up to 42.85, but currently with the ongoing sell-off, we are looking to get a price to earnings at 15.82. So what we get here is that for 4 years the price was consistently on the increase, going from around $100 to $300 per share, and during that time we saw almost a steady increase in earnings. But since earnings have been increasing more than the price, we've seen this ongoing decrease in the price to earnings ratio. But recently in the last year earnings are going sideways, and the sell-off is pushing the price and the PE ratio down. So buying the stock at the current levels would suggest that we are getting the best price to earnings in the last 5 years. Now what I'm not a huge fan of is this change in the shares outstanding over the last 5 years. So back in 2016 there was 2.57 billion shares outstanding, then in 2017 it increased to 2.6 billion, in 2018 that was at 2.63, there was not much change for 2019, but then issuing new shares really accelerated in 2020, where the number was already at 2.7 billion, and the most recent one in 2020 is at 2.76 billion shares outstanding. So they have been steadily diluting shares, which I don't think is something that long-term investors wants to see consistently. There are some good signs that they started looking into buybacks. For example, in Q2 they reported buying $5.1 billion worth of stock, and if they could continue doing that, it would bring extra pressure for the price to go up rather than slowly bleeding out. Maybe continuous buybacks would also bring more investor confidence for the long term. Now let's take a look where analysts think the stock will get next year. So out of 48 analyst price targets, the average is at $213.92. With the current price of $133.35, we are looking into an increase of 60.4% in just 1 year. Now if we look into the earnings estimate, from 31 analysts it is expected that they will bring $9.63 per share. If we believe that the PE ratio will remain the same, then we are looking into an increase of 15.2% in the share price, which would put the stock for next year at $153.61. Now let's check what Superinvestors have recently done with the name. So Alibaba is currently in 15 of these large portfolios, and 8 of those reported that they have been buying more shares in the last quarter. For example, Charlie Munger added 82% on his position, and he is now holding 302,000 BABA shares, which makes almost 20% of his portfolio. The largest addition was in the FPA Crescent Fund, where they increased their position for 730% and are currently holding 5,586,000 shares. At the current price of 133, that is a position of almost $745 million US. But even though the majority of the super investors are buying more, a few are reducing on their positions. The YouTube investing community loves Monish Pabrai, and he has reduced his exposure to BABA by 77.8%. So currently the name makes 4.45% of his portfolio, where previously that exposure was around 20%, so 1/5 of his whole capital. But overall, with the price dropping, we see more super investors adding in or just holding rather than selling away. I'm also holding a position in BABA on eToro, but the performance here is unfortunately as bad as the share price on the year to date. So we currently have $200 invested at an average opening price of $197.85. Unfortunately, with the current price of 133, it means that we are down for 32.64%, which makes the value of the position at $134.72. So what do the technicals say? Could this may be the right time to start buying in? On the initial drop on earnings, the price went to the lows of $141.89 under the 50-day moving average. And we also also have set a support price target at 158. The relative strength index dropped to 32, and we've been getting more bearish there with the MACD lines. It seems that we got the worst of it on Tuesday of this week, with a loss of $133.31. The relative strength index was under 30 at 26.9, and the 12-day moving average of the MACD was still going further out from the 26th one to the lower side. But then 2 more trading days passed, and we still closed at $133.35. The relative strength index went up just a bit to 28.8, and the distance between the MACD lines have decreased just a bit. So with this slowdown in selling, I might start a trade here and look for some profits for a swing trade. But if we zoom out more, we can find that in the beginning of 2021, the 50-day moving average crossed the 200-day one to the lower side, and they continuously have been moving like that for the next 10 months, which shows that the buy and hold strategy didn't work out for that time. So I wouldn't want to predict that we have some sort of a bottom right now. Now let's do a quick recap of what we learned so far. So the latest earnings missed expectations on both top and bottom lines, and the company gave poor outlook going further. The variable interest entity structure really adds on the uncertainty, and the recent news on Didi really supports that. From the financial standpoint, revenues have been on a consistent increase for the last 5 years, and with earnings increasing and the share price going down, we are currently looking into the lowest price to earnings ratio in the last 5 years. Unfortunately, the company seems to be consistently issuing new shares, and even though they recently started putting more focus into buybacks, it's not yet clear for me if that will be sustained. Analysts predict earnings to increase for next year, and that brings the estimates for the price to go up from 15 to 60% in that time. From the Superinvestors standpoint, a small number are selling, but overall the majority are increasing on their positions. And the technicals are currently poor, so we may not be at the bottom just yet, but the recent overselling suggests that we could go for a swing trade. So that was it with today's analysis. I hope that you got value out of it, and if you did, then make sure to leave a thumbs up, it really helps the channel a lot. So what do you think? Should we be buying into BABA right now, or are there too many concerns with the stock as it is? Share your stance in a comment below. If you are interested to know exactly when I buy or sell any stock, then consider memberships. By becoming a member, you will get access to Discord, where I share my stock watchlist and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I did a stock analysis on Activision Blizzard, ticker symbol ATVI, and if you would like to check that one out, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.